fork of an IPO, Peter. WH Group pulls its IPO that it halved last week in terms of value here in Hong Kong.
Yeah, that's right. It's really a bit of an embarrassing situation for WH Group. But actually, we at Breakingviews think they've done the least bad thing in the circumstances. This IPO was in real trouble. Investors were unhappy with the valuation that WH Group, which is a sort of amalgamation of a Chinese pork company and then which then last year bought Smithfield, the US pork company. They were trying to relist the whole thing in Hong Kong, and investors really weren't happy with the valuation that they were getting they were asking for this business. And so WH Group had sort of responded by trying to do things like shrink the size of the offering, but crucially what they hadn't done was lower the price. And so actually cancelling the IPO, even though it's embarrassing, allows them to go away, take a bit of time to integrate these two businesses a bit more, and hopefully come back with a slightly more compelling story and possibly at a better valuation for investors.
So this little piggy isn't going to market after all, but can it actually come back with a new valuation and investors will buy into it? It seems like it's kind of tainted the waters here.
Well, it's definitely tainted the waters. And I mean, when you think this company had already done various things like changed its name to try and sort of present itself in a new light, so there's definitely going to have to be a bit of a rethink. But the fundamental problem here was that you had what was essentially a Chinese business, which is already partially listed in China, controlled by private equity groups, which had gone out and made a big leveraged bid for this company Smithfield in the US, and had then put the two together. They only bought this business 7-8 months ago. They put the two together and tried to relist them. And the way the valuation stacked up, they were basically asking a price that was at least 21% higher for Smithfield than they paid last year. And investors just looked at that and said, well, you haven't really integrated these two businesses. You haven't added any value to it. And yes, we can understand the logic that says that you should be able to sell more US pork in China and the demand is growing and people in China want to eat more foreign foods. But when you put it all together, the valuation was really too demanding, a little bit too greedy possibly, for what the underlying fundamentals were telling us.
That is just the point, Peter. It sounds like in the end it really was a tale of greed amongst the private equity investors, the bankers. Can they actually go back and reformat it?
Well, there's a lot of red faces here. The private equity investors obviously won. They'd hired 29 banks, which in itself was a record to do this IPO, and still they couldn't get this $1.3 billion offering it was in the end away. So it's definitely going to require a rethink, and they're going to have to come back and be a bit more humble and probably a bit less demanding on the valuation in order to try and get this IPO away in the future. But we think in the circumstances it's better to go away for a bit and come back at some point in the future than to have pushed ahead with what was clearly going to be a very unpopular and unappetizing IPO.
Unappetizing IPO shelved by WH Group. Will they come back with smarter valuations?